the provisions of charitable trust in last, say 3 to 4 years. It has continued from last 5 years, but in last 3 years, you see the amendment which are carried out in such a manner and to such an extent, it is become very difficult to remember which provision is applicable from which date, which provision will apply from which year, and so on and so forth. So, not only that, friends, it is being made watertight provisions. If you miss any date, if you miss any timing, then the impact or the effect of those defaults will be very heavy. You lose exemption, there are penalties per day, there are penalties for not doing certain requirements. Not only that, in recent times, in last 21 and 22 budget, particularly 22 budget, it has become very difficult. Not only that, even filing of ITR is also not remained that easy. And if you miss any column, or if you write the figures in the wrong column, you face 143 notices and adjustments. So filing of ITR 7, it's also become an art. In spite of knowing or not knowing the provisions, which figure is to be written where, and what figures should tally with your computation, with your accounts. Not only that, now audit report is to be filed 1 month before, that is 30th September, as prescribed in 44 AB provisions. Now, once you submit the audit report, and when you go to file the return, if there are some discrepancies, if there are some changes, or you realize some mistake in the computation, and that may occur while filing the ITR 7. So it is, I congratulate Ashok Sharma ji for bringing this subject, though it's a technical. So how to file, because there are so many issues faced by, we see so many questions from the members how to file which figure where. So Mr. Ravi Gupta is there. He is well versed with the trust provisions. I think he will explain to you in detail how to file the ITR 7. And we will see some important recent amendments and this notification of maintenance of books of accounts, which itself is you will see it's a 4 pages of notification, and every trust is required to file maintain those books of accounts. If you do not file, what will happen? We will see. Ravi will cover that.
So first and foremost, according to me, ITR 7 is a result. Now the ITR 7 which we have recently got now from the Income Tax Department is a result of all the recent circulars, all the amendments in the budgets of Finance Act 2020, 21, 22, notifications, circulars from time to time. Incorporations of all those effects in this ITR 7. So that is why, first of all, I would like to just run through the provisions or run through the amendments which have been made in the last 3 years, basically. Finance Act 2020, Finance Act 2021 and 22. So my syllabus today is running from point numbers 1 to 7, beginning with brief note on amendments by the Finance Bill 2020, 21 and 22, as I said. Then who is required to file form number ITR 7, structure of form ITR 7, changes in form ITR 7 with effect from assessment year 22-23. Then recent CBDT notifications, books of accounts and other documents Then one more notification recently on Form 10, whereby we have received a new Form 10 incorporating the changes in the Finance Act 20 and 21 and 22, basically 22. Then we talk about recent CBDT circulars about condonation of delay in filing form number 10BB. This is related to 1023C organizations. Then condonation of delay in filing form number 10B related to organizations registered under section 12A. Condonation of delay in filing form number 9A and form 10, again related to organizations registered under section 12A. And then condonation of delay in filing return of income under section 139(1) due to the operation of section 13(9). And others, I think some few more amendments. So I will cover this today. I think as far as books of accounts and other documents are concerned, Vipin sir will throw some light on it.
You begin with it or you start?
I will start with this and then
You start,
then we can
books
go.
of account, I have certain points.
Yes, sir. So, brief note on amendments. Now, everybody is quite aware now. From Finance Act 2020, the re-registration process was introduced. Re-registration process of 1023C institutions, re-registration process of 12A organizations, and the re-approval of ATG organizations. The people, the institutes which are already approved under section ATG, those had to renew themselves or get themselves reapproved. So this was the procedure which was introduced by the Finance Act 2020. Now, re-registration of the organizations which are already registered under section 12A, provisional approval was introduced by the Finance Act 2020, because this provisional approval thing was introduced. Why? Because we used to face a lot of difficulties when we used to go for registration under section 12A, saying that there are no activities as such, so how can we grant registration under section 12A? So that is why this provisional registration ka funda was introduced. And then after the provisional registration is issued, the process of converting the provisional registration to regular registration, which is for a period of 5 years, introduced. Then renewal of registration and approval after the period of 5 years. Now, suppose in the financial year 21-22, you got yourself re-registered. That registration will run up to 22, 23, 24, 25, 26. Finance Act, financial year 25-26. After 25-26, you have to get yourself approved again. Of course, the time limits are given, and we have to follow the time limits very strictly. So this was about re-registration, re-approval of ATG 12A. Then there are two more clauses as far as section 12A organization, registered organizations are concerned, whereby first thing is when your 12A registration becomes inoperative due to yourself getting registered under section 1023C organization. And the other possibility is the change of objects of the trust, which are not in consonance with the conditions offered or with the conditions laid down on the organization at the time of earlier registration. So these are two more possibilities which are unique to 12A organizations. So this is about the re-registration process. Of course, as far as the re-registration process and the new registration process is concerned, it is not much related to your ITR 7, which has come now. But then too, I have covered so that, just to brush it up again, once again. And as a result of this, for giving effect to all these changes, 12A 1AC was introduced and 12AA was replaced by 12AB. 12AA is no more applicable now. 12AB has been replaced. Now, what are the other amendments which have been brought? It was clarified that corpus donation shall not form part of the income in the hands of the trust institutions approved under section 1023C of the Act. Now, why this amendment was brought? Because earlier, corpus income cannot be treated as in the hands of the trust as income was not specified for 1023C organization. This was only unique to 12A organizations. So that is why this ambiguity was removed by this amendment. Then, as we all are aware, audit report dates have been introduced. Audit report date is 30th September. In other words, 1 month before the date of filing, we can file the returns up to 31st October. But the audit report has to be obtained by the 30th of September. This is for both 1023C as well as 12A organizations.
And I will add here.
Yeah.
earlier there was no requirement of attaching audited books of accounts, income expenditure and balance sheet. Now since last year, while uploading Form 10B, they are asking for audited income expenditure and balance sheet.
Yes.
So while uploading 10B, you are required to upload audited accounts as well. So accounts are also should be ready and audited and signed before uploading Form 10B.
Yes.
So all practical purposes, it has become 30th September.
Okay.
Only return is to be filed.
Only return is to be filed by that.
Now, only one my concern is here: why accounts are required? The accounts are required with the assessing officer or income tax department for the assessment when you file the return.
Right.
For doing a proper assessment, they require books of accounts. And why audited? Means some authorized. From chartered accountant, it is audited, so they can rely on that. But I can't understand why they are asking along with Form 10B.
Yes.
It should have been, in fact, along with the return.
Return of income.
Still return, they are not asking. Only they are asking to just file the figures.
Right. And the accounts are to be filed with the auditor.
Yes. So this is what is difference.
Yes.
CPD said the return must be paperless. Change of objects. They are saying if it is not in consonance with the
Correct.
earlier granted. So if there is a minor change, can the interpretation be if there is a minor change in object, it is not required?
It has to be seen on a case to case. I would say that if there is a minor change and if it is not changing the fabric of the objects of the trust, then I don't think that we need to reapply it. But of course, nothing has been defined as such. There is no
Sure.
clarity as such.
I think it is your judgment
Yes.
whether it is as per the objects which were under according to that registration was granted, and now you think it is in the same line it is. So it is that judgment you are taking. So it is in fact the judgment is to be taken by them.
Instead of
Yes, instead of us. But because if it is not accepted, then the consequences are very high. Because you will lose registration.
Yes.
also
Yes, and 115 TD will apply.
Accredited income will kick in.
So many other provisions will give you trouble. So I think unless you are 100% sure, then only you take that risk. Not only that, now in preparation of books of account, you have to write if the changes are there, so why and what changes and roles are to be given, and that they will see and judge it.
Yes.
So the judgment is yours then.
Now the ITO has been given the power to refer the case to the PCI.
Yes, that is 143.3. That is another, and that is we'll see that it is not his option.
Yes.
He has to.
He has to.
So amendment is that he has to intimate. Then CIT will decide
Yes.
whether according to that it is to be rejected or to be registration.
He will see the merits.
Yeah, please continue.
Form 10 ED, is it required for the trust which are already existing trust which who have filed can?
The 10AB form is for the renewal thing. Once, so suppose you have taken a provisional registration, then from provisional registration you are going to the regular registration. In that case, you need form number 10.
But even for the existing trusts, what they are giving is provisional registration certificate only.
Yes. Yes.
No.
No, that was the.
Take a minute.
Yeah. That is changed again. Yeah. Then there was no circular again.
Circular 11.
Yes.
Circular 11 has clarified that.
Yes. Because earlier it was issued provisional. Rampant. Everything was provisional.
Up to people who have applied till May 21, they all were given provisional registration, and this is something really very serious matter.
Yes.
Because who was he? DGIT. How he can decide it's a provisional?
It's a provisional.
An act and rule says you have to just reapply.
Yeah, just reapply and
It is. I'm saying in my other talks also. The word re-registration is not properly used
Yes.
in the act. It should have been revalidation.
Revalidation.
Earlier, you were allowed registration perpetual. Now they want to restrict it to 5 years.
5 years.
And that is one reason. Another reason to centralize all the trust documents and records, because all the separate different CIT exemptions were having their registration and own system and own documentation and stuff. It was going on. Now it is centralized. Every trust has been given particular number, URN, and then now another thing. Now for provisional to regular and renewal will be done by CIT exemption, not DGIT or CPC.
CIT exemption.
Because there he has to call for documents,
Yes.
there he has to
We
see.
have to prove our credentials over.
Yeah. Yeah, please.
Yeah.
So 10AB, what your question on? What's your name? Divesh. See, 10AB is just an application.
It is just an application.
10A is re-registration.
Yes.
Correct? Now 10AB, when you are provisional to regular, we are using specific words, provision to regular, and after 5 years, means before 6 months before is after 4.5 years, renewal. That is in Form 10AB.
Okay.
For both ATG and 12A.
Yes.
Okay, physical, renewal or renewal.
Hearing will be done physical. Application is to be done. And CIT is asking. Yesterday only I have received, somebody has sent me today morning. You are there. So मैं उसको मंगाया form. So it is physical details they are asking, but you have to upload it. You can send it by mail to CIT, and in case of need, you can go personally and attend the hearing.
They have also started asking 10AC. And one of the trusts, we have received a notice. They get, please share 10AC. I think 10AC is an order.
Order.
Right. So the officer is only asking the trust to upload the order. Now, why would that situation?
See, I tell you one thing. CIT examiner publicly asked this question in our chambers earlier meeting with Under Secretary and Joint Secretary when they were there. Yes, publicly asked that they have also 6 months time.
Yeah.
So people are not submitting the required forms in time, and they are taking adjournments on that. So then we have no other alternate to reject it. So better that you file all those things. That is one thing. Another thing is 10AC should have been attached with the application. It is one of the ones. Once it is your provisional registration.
Yes.
Now, if they go for your systems and from there they print out.
Better to take it from the.
It is better we submit.
For saving of time. And in fact, I feel that we should have filed. We have so much of experience. What document should be filed?
And now everything is digital, so there is not much concern. Just have to attach it. Yes, you can. Okay, sir. From assessment year 22-23, there is one more major amendment. That is to avail the exemption under section 1023C, 3AD and 3AE. The limit of the annual receipt has been increased from 1 crore to 5 crores. Of course, there are two limitations to it. First of all, if it is an educational institution as well as a medical institution, the cumulative turnover will be taken. And earlier, there were judicial pronouncements which said that if you have different institutions again under a particular organization, the 1 crore limit will apply to each institution. So that anomaly has been removed, that ambiguity has been taken care of. Now you have to take a cumulative turnover of 5 crores to avail the deduction under section 1023C, 3AD and 3AE. So this is one of the major amendments
on trust.
Yeah, for 1023C and 12A both. Then one more thing, ATG to be registered organizations, if property held under trust institution includes temple, mosque, gurudwara, church or other places of worship approved under section ATG 2B, any sum received as a voluntary contribution for the purpose of repairs or renovation may at the discretion of the trust be treated as forming part of corpus, subject to the conditions of course, and then effective from 1/4/2021. Any donation received from 1/4/2021, this amendment will apply. Now, in my view, the reason for this amendment is the recent Ram Janambhoomi development and many other institutions. This amendment has been brought in for that purpose because the collection drive had begun from after 1/4/2020. So this is the reason that they have been given the powers to treat a particular donation as corpus donation, of course, subject to conditions. Of course, subject to conditions. Then provisions similar to section 11.2 and related sections, that is 11.3, 11.3a, introduced for organizations registered under section 1023C. 11.2 is again accumulation for a period of not more than 5 years. Earlier, this was not there for 1023C institutions. Amendment with regards to keeping and maintaining books of accounts and other documents in such form and manner and at such place as may be prescribed for trust institutions registered under both 1023C and 12A of the Act. Now, this has been the specification has been come wide the notification number 94, which we have received very recently, 2022, dated 10/8/2022, which is called the 24th Amendment Rules 2022. 10th August 2022.
We'll discuss in detail.
Yeah, we'll discuss in detail. Powers of the PCIT or CIT, prescribed authority, to take cognizance of specified violations. Suo motu, reference from the AO, selection by the board under the risk management strategy. Specified violation has been defined, and this is applicable for trust institutions for both under section 1023C and 12A also. Then there is amendment regarding returns of trust institution falling under section 1023C. It is to be filed in accordance with the provision of section 139(4)C, read with section 139(1). The time limits have been applied to 1023C organizations also. Income applied for direct or indirect benefit, major changes in income applied to direct or indirect benefit towards specified persons specified in section 13(3). Any expense towards specified person will attract maximum marginal rate of taxation. Number one. Penalty provisions have been brought into that we will talk about later when we come down. Surplus to be taxed after allowing expenditure subject to conditions both in the case of trust institution registered under section 1023C and 12. Of course, this was creating a lot of problems because if there is a violation, the entire exemptions under section 11 and 12 were disallowed and the gross receipts were put to tax at maximum marginal rate. So a little bit of a clarity on that subject. Then the provisions of section 40A1A and 40A3 and 3A shall apply mutatis mutandis to trust institution registered under section 1023C. Earlier, they were not applicable. No set-off or deduction or allowance of the excess application of any of the year preceding the previous year will be allowed to both types of organization. No set-off will be allowed. There were judicial pronouncements which said that if there is a deficit in one particular year, if that deficit can be adjusted against the surplus of the subsequent year. Of course, there was no provision in ITR 7 to cover that, but now it has been totally removed. No set-off will be allowed.
That is from assessment year 22-20.
22-20.
Up to 21-22, it will be allowed.
It will be allowed.
And that is because
Correct.
of that Subro's education
Yes.
system.
They reversed the Subro's education apex court decision.
Yes.
And because they were not allowing, they said we are in Supreme Court.
Yes.
Supreme Court took its own time and they dismissed their SLP. And since then, for 2 years, it was 2021 and 21-22, it was allowed and accepted.
22.
But then they reversed. But I am really feel very uncomfortable by the manner in which it has been brought in. Explanation 5 is added. Now, such a reversing Supreme Court, can you imagine a case has gone to Supreme Court? Then how long the litigation must have been taken? 10-15 years?
10-15 years.
Somebody is fighting for that matter for 15 years and the apex court gives in your favor, but they reverse that decision. It just by just giving an
Small
explanation.
explanation.
I agree. The purpose is solved. But is this a matter? Can't you accept openly? Yes, we don't want to allow you, and this is the amendment section 11.7, 11.6 for depreciation you have added.
Yes.
11.7 you have added. Yes. Why not 11.8? Now it will not be allowed.
It will not be allowed.
You are just amending by way of explanation giving and that. So they have no guts. Anyhow, certain things come from the heart because, day in, day out when we work on the charitable trust, it really hurts. Anyway,
Okay.
we are professional. We have to follow
We
the
have to
provisions
follow
and
the
laws,
rules.
understand and yeah, please
Make the
carry on.
people understand it. Some payables shall be considered as an application of income during the previous year in which it is actually paid. Now, this is one more amendment. This is going to create a lot of challenges now. Earlier, the mercantile system was allowed. We could provide for the expenses. Now, the amount when actually paid will be treated as application.
So this will be
Now, here-
particularly defeated in company cases.
Here,
We have
here,
to follow mercantile system.
here I want to add something. Yeah, ठीक है. Now, if you are mercantile system of accounting, your income is to be accounted for mercantile system.
Yes.
Application will be allowed on payment basis.
Yes.
So that is one. Either you allow both on payment basis or you don't allow one.
Don't stop mercantile
Right?
system.
That is,
It will have to be mixed.
yes. Then the second thing is, it is applicable from which assessment year? There is a lot of confusion.
Yes, yes.
There is a lot of discussion. There is a lot of misunderstanding on this year of applicability of this provision. Because when the budget was proposed, it was from assessment year 22-23.
Yes.
And budget was passed without any discussion on that. However, the taxman's book,
Yes.
it says from applicable from 1/4/23. So taxman book says it is from applicable from 23-24 assessment year,
Yes.
in the next year. But then during the discussion and understanding the provisions, the act in the website of income tax, there it is given 1/4/22. And memorandum explaining the provisions, amendments also says 22.
22.
Only thing was that while passing the budget, whether they have made 22-23. But effect is not there in the official act. Because it's a printed by taxman.
Yes.
So now there is a question again, whether it's a printing mistake of the department or printing mistake of the taxman's book. But
Letter prints are now showing 22. Letter prints,
is it?
yeah.
Yeah.
Then they have corrected that
They have
mistake.
corrected.
So Ashok is clarifying that. Then they have corrected. So the thing is that it is applicable from assessment year 22-23. So for current years, when you are filing the returns for 22-23, you see the application on payment basis. Now there are hue and cry on
Yeah,
this issue.
of course, there is.
But I don't find much in that because if you see company cases, if you see any business cases, are we not adding back for certain
Yes,
expenses?
we are.
Are we not adding back
We are
depreciation as per income tax and as per the those laws? It is similar to exactly the that. Or whatever the provisions are there, you add computation. I am suggesting you continue your mercantile system.
Yes, yes.
You provide for that.
That is the ideal way to.
And while computing the income, you add back it. Only thing is it will affect your 22-23 income. It will increase. Because there is a provision also. Okay, earlier provision, previous years, 21-22, will not be allowed because you have claimed that as application
Yes.
of income. So again, double deduction will not be allowed. So that clarification is there in the act.
That is.
Second thing is,
Proviso is that.
in this year, you will have some impact, whatever the provisions are there, provisions you have made, will be added back. But at the same time, you have option of accumulations.
9A, 10, 9A.
9 means provisions are there, they are going to pay in short time. Provisions are the short time, that means liability.
Yes.
So 9A, you can go and you can claim. Even if you file on 10, 11, 2 also, you are allowed to spend in 1 year.
Yes. You can accumulate for 1 year.
So only thing is that we have to make this computation accordingly, and we have to understand our clients and trust. Okay, this is the system now. You have to work accordingly. So that's what I want
So
to
as
know.
you said, application will be on payment basis.
Yes,
But then expenditure incurred to earn that income can be.
that is also
Yeah.
application.
Hmm.
See, even expenses, there are judgments. Establishment.
For
expense.
example, municipal taxes for earning rent.
That in any case application of income
It is an application.
for the out of the property
Hmm.
and for the maintenance of the property. So those are allowable.
You are saying something?
Yes, maintaining books on the basis of provision, merchandise system or cash system or mix system.
No, mix is not permitted in
Mix is
income
not-
tax.
Mix is not.
Now they are saying that the expenses will be allowed on the basis
No,
of
you have
That is
to
only
convert
for-
into cash.
competition.
That is only for computation.
Only for charitable trust and
Only for
for
charitable and provision, that only,
competition.
only for competition.
Yeah,
No
yeah.
changes.
Either you change your system of accounting 100% to cash, or you continue with mercantile and add back those provisions.
Add back those two.
And file your return accordingly. 10B also should be accordingly. After disallowance, only your 10B application of income should be there, and
Yes.
accumulation figures are also to be written in that.
Yes.
Only one thing to be
Yeah, please.
here, unlike 43B, amount paid before due date of that provision is not there.
It is not there, but it is requested to that Under Secretary, Mr. Kamlesh,
Hmm.
and Madam Sahai was there, Joint Secretary and Under Secretary. They have taken this point, noted this point. They will think it over.
Yeah.
I think that is a good suggestion and good idea. It can be paid before the due date. It can be allowed. Because he said that people are not paying for 10 years and you're taking application of income. So 43B will restrict to the filing date.
Yes.
October, please.
Yeah. For AY 23-24, we have to look at AY 22-23
For what?
computation,
For what?
whether that payable is paid or not. For preparing computation for 23-24.
Of
It will
course.
be a rollover.
So yes.
Of course. From next year, then the opening balance paid and current years will be reversed. The difference between opening and closing balance will be the effect.
So if the payment, if the provision is made for the expense and if it is paid within the due date of filing the return,
No. That
it should be
43B is not there.
it will not be paid. That is 31.
No, yeah, correct. Correct. Even if you pay on first April, it will not be. Yeah.
Yes, sir.
No, there will be some issue if you issue a check on 31st, so that is cleared in your account on say 3rd of April. Then what? Is it paid or not paid?
A lot of entries are actually happening because of CSR also.
Always right now.
Because of CSR.
Yes, yes, yes.
CSR as well as so many others.
So many others.
When you have an income, you make big provisions.
So many others.
And those provisions I have seen in the account, it continue for years.
Yes.
So amendment is correct, but some relief, some benefit
So,
or 43B
What is
should have been.
our, what is our views on a check issued on 31st March?
Yeah, let us.
Yeah.
It should be
It
allowed.
goes back, the date goes back to even whenever it gets clear, it goes back to the date of issue.
No.
Yes.
For income tax
As per the
payment,
negotiable instrument.
Huh.
In your bank statement, it will reflect, say it is clear on 3rd of April.
3rd of April.
Can officer say it is not paid on 31st March?
No, other party has not deposited, what we can do.
Even he has deposited on 31st and the amount is debited in your account on 3rd of April, then what?
At least, sir, at least
No, no, it's a good point.
Let us take another
Because
one
it-
example.
I think
He
this is,
deposits only on 10. He has 3 months to deposit, it depends on 15.
Yes.
What happens then?
But-
What happens? Let's not take 3rd April and which is some very vital. Let's take the deposit after 1
It is-
month.
Yeah,
it is-
1 month.
it is, I think, litigated area. There cannot be any
Gray area.
clear-cut answer to this gray area, because paid means payment. If you are so studious or if you are so correct, you do RTGS on 31st.
Sir,
Online payment, they are arguing. All those systems are available to you.
that's our system. is
For other customers, you are using that system.
For income they are using.
No, even other expenses.
Other expenses.
During the day, during the year, you will see there are so
Only
many
for the expense of
RTGS,
31st March, you are issuing checks.
NEFT.
I think we.
Yes, they will proceed.
It's a litigated.
Yeah.
Litigated, but advisable to pay it off.
Okay, one more amendment. In the case of trust institution registered under section 12A of the Act, due to operation of section 11.3.
Ashok, you said after 15 days, 20 days, if you can go for 9A and that payment can be taken.
Yeah, that,
9A is always available.
So no risk.
no risk. Yeah, that should not be planned also this way.
Yeah, next.
Income, not for payment. No, no.
अरे तो वही नो accumulation का payment चाहिए था ही नहीं यार.
Not risk.
Deemed application हो गया ना sir?
चलो चलो.
In the case of trust institution registered under section 12 of the Act, due to operation of section 11.3, the penal proceedings were attracted only after the expiry of the 6th year. So एक साल का grace मिल रहा था because of section 11.3 prior to the amendment of the Finance Bill 2022. After the amendment, the unutilized accumulated amount shall become taxable in the last previous year of the period for which the income is accumulated.
It is 5th year, no, not in 6th year.
Yes, sir.
So now 2 years period will be,
Yes.
2 years will have.
Yes, yes.
Is there an issue with this? Can I ask?
Yeah,
sure, sure.
You are here.
इसके लिए तो बुलाया आपको.
उसको इशू के लिए बुलाया और हमको काय को बुलाया
रिपोर्ट कंट्रोल करने को.
lighter side. But that's what I in the beginning said. कि भाई study circle meeting is अपना घर की खेल. We can discuss. It is for that.
Here they say that you have to spend it for the objects of the classes. You have not spent. But in the 5th year, when you are supposed to get over, there is excessive revenue expenditure. Excessive revenue expenditure. From this fund, can that excessive fund can be adjusted against the 11th year?
You are talking about 11 to accumulation. When you say 5th year, so it is for a specific purpose.
Yes, it is not.
The purposes are mentioned
So then
in
it
your
is
form
not
number 10, mind well.
No, now 11th payment becomes the income.
Yes,
ठीक है, okay.
Becomes the income. As soon as it becomes the income, it enters into computation.
of course.
If there is excess spending from the same amount and the revenue, is there any provision to not allow me the set off?
There is.
Good idea.
No, it is
No.
there. People, I have seen, I am fighting that case.
I won.
Every for nearly 15 years balance sheet computation, if you see, every year 11 to.
Yes, every year.
Even the 6th year
Every year.
was becoming income, again 11 to.
No, I'm
No,
not on
that is
that.
not allowed,
no.
I'm not talking about
No. The impact is the same. No. If your expenditure are that and it is 11.3 your income,
No.
you are saying that it is, and the wording says is become the income of that year.
Yes.
There is no any mention that it
It
is
will
to
be
be
taxed
taxed
separately.
separately or separate rate will apply. Even now that MMR provisions are there it is not covered.
Not covered.
The specific provision.
Yes. So it's a good case to fight.
Yeah. So they are giving, they are allowing it. They are allowing it.
Expenditure is fine, but only thing is you have not spent 11 to accumulation for that specific purpose. There was the income tax officer has power to change that.
Yes, it has.
11
Three A.
application for change of.
You can make an application.
That should be used and then spent for your other objects of the trust, and can it be, then it becomes more clear.
चलो.
Yeah. But yes, there's no bar on this. That's how this is the clarity.
There is no bar. Bar is separately.
Now, introduction, again, when there is a violation of the proviso to section 215, violation of the audit provision and violation of the dates of filing returns. In that case also the expenses will be allowed, because earlier the thing was different. Earlier the entire gross receipts was taxed at maximum marginal rate. So this is one more, I would say, a welcome amendment.
Beneficial.
Yeah.
There were judgments we have accepted.
They have accepted.
Supreme Court, they reverse.
Yeah.
Certain things they accept.
Then new section 115 BBI introduced to tax specified income at maximum marginal rate. Specified income is defined.
So here maximum margin of 30%.
30%.
Maximum margin of 40.
I mean, that is
No,
43.
no, MMR is 30.
30%. Then it becomes 43 because of the surcharge.
Surcharge. So here 30%.
Yes.
So in any place where it is written MMR, it is 30%. If you meet,
Yeah,
cross
the
that.
other criteria. Then proviso introduced to section 56(2)(10) to tax money or property as deemed income if money or property is given to specified persons as defined by section 13(3) of the Act.
Apka, this now expenses will be allowed instead of
But subject to conditions.
conditions means only certain expenses will be allowed.
Certain
Certain will not be allowed.
Yes.
Direct expenses to that particular object
Yes.
will be allowed.
No. That is there. But donation to other trusts,
That will not be
depreciation not allowable.
That will not-
40A, 1A applicability will not allow.
That has to be
40A,
checked,
3A
yes.
will not be allowed. And amount spent out of the even opening corpus also you have spent will not be allowed.
Yes, not.
So, but
Those conditions are there.
But even though with that, this is a welcome
It is a
provision.
welcome.
At least actually which are spent will be allowed. Now we'll see in the books of accounts also this provision will be how helpful.
Yes.
What are the GBI, what are the specified? Besides, there's only one.
No, there are various things in there. They have defined the specified income. I have not elaborated that.
It is
for
there.
the sake of brevity.
Yeah, we can see after.
We can
No,
see
we can see afterward.
It is just time.
Then new section 271 AE was introduced to levy a penalty of 100% of the amount applied for the benefit of specified person on the first violation and 200% on subsequent violations. 271 AE. Section 234G introduced wide finance bill 2020 late fee of rupees 200 per day for delay in providing the TDS certificates, etc. in the certificate statements to the income tax department. Section 271K introduced wide finance bill 2020 penalty not less than rupees 10,000 up to rupees 1 lakh for violation as defined in section 234G of the Act. Then 115 TD TETF earlier was not there for 1023C. Now they have included 1023C also in the garb of 115 TD TETF. That is accredited income. Then, as we discussed, proviso to section 143(3) empowering ITO to send a reference to PCIT, CIT to withdraw registration and or approval, and the relevant time limits and procedures have been defined by this amendment.
So these were the amendments.
Two more amendments, sir. I mean, I updated later on. This is regarding again corpus. You cannot spend the money from the corpus. And if you spend the money from corpus, that is, when your income is on a lower side as compared to the expenses, it is obviously in most of the cases you are using the money from the corpus. So money spent from the corpus will not be treated as application. It will be treated as application only when the corpus is compensated. Similar in the case of loans and borrowings, if you are borrowing the money, if you are spending towards the objects of the trust, obviously there is a deficit in the income and expenditure account. It will be treated as application only when the loan is repaid. And because of these amendments, these two major amendments, ITR 7 में बहुत सारे changes.
Corpus,
So you said corpus to be represented by, so they have said you have to earmark.
Yes.
My question was, I asked you in the beginning also, whether it has to be in the specific bank account or it in the existing bank.
It can be in the
account you have to
existing
earmark.
bank account. Yes.
No, other day, of course, that was pointed out to the joint secretary and the secretary. They were thinking that you can have separate bank account. But then even according
You can
to
have,
even,
but
yeah,
I mean, it's not needed.
necessary.
now I would like to say something more and on this amendment. The corpus, there were double deductions. We all agree, and the amendment is brought to cover that. Now corpus, once you receive, you get 11 only. When you spend, you are claiming as application of income. Now application of income is not allowed in that year, and they want that corpus is to be spent or deposited into 11(5) modes and is specifically to be maintained. The question were there, what about the opening corpus?
Hmm.
Whether that is also to be covered under specifically showing, or whether only the current years. Because the explanation which has been added to this amendment, there it says that such corpus, the word such corpus is to be specifically shown or reflected in the accounts. So such means the corpus which has been received during the year and you have applied, whether applied or not applied during the year, then there is no question of investment. Even you are not applied and you have invested in that year, that is to be specifically. Now bank balance is also, Ashok, you are rightly asking that question, is that bank balance is also deposited in bank account.
Yes.
But only thing is how you will justify that it is specifically mentioned. So only in certain, I in my office practice, what we are showing that bank balance, general balance so much, and corpus donation balance is so much.
Correct.
So you have specifically mentioned and ask them to put it into FD into the current year. That they have managed. So thing is this, you have to see that you satisfy those requirements. If there is a FD, now there are certain things. Suppose there is a corpus of 10 lakhs, and FD has been kept 25 lakhs. So there also you can say, okay, by out of this 10 lakhs is for the corpus.
Yes.
And it is advisable that specific amount should be kept.
Yes.
And it is to be written in the balance sheet itself. And this is FD for corpus of financial year 21-22 or financial year 22-23. And corpus also I will advise, okay, in the balance sheet, opening balance, received during this year, received during this year, received during this year.
Yes. And then ultimately the total.
So that it will match, it is specifically deposited and their purpose will serve.
Right. Yes.
But even if you use, sorry to interrupt, opening corpus if you are utilizing, then again it will not, because the word used only corpus. There is no mention corpus of the current year or
The earlier years.
earlier year.
Earlier
So that will not be allowed as application. That also replacement is to be done, and you have to redeposit it into 11.5 and then claim application in that year.
This is to avoid erosion of corpus.
The other side of that. Suppose I have a corpus of 1 crore. I don't have FDs of, I have FDs of 59, but it's already spent towards business. I reimbursement of corpus now. Will that be allowed?
It is mentioned that which is not allowed as application of income.
Earlier not allowed.
Not.
Earlier not allowed.
They've already claimed it. Then you cannot claim again.
And that I stand corrected that I 115 BBI, they've now added 11.3. So you can tax at 30%. Separately specified for asset. So now what we were doing earlier is not allowed from 23-24.
Yes.
Yes.
Yeah.
Otherwise,
It is covered in 115.
115 BBI, 11.3 is covered. So now if you don't utilize, you have to pay 30% tax.
And 115 BBI supersedes all the other
All the
sections.
yeah.
It is mentioned. It is clearly mentioned. Yes. Now,
Saving bank account deposit, that is also allowed.
11.5
Yes, yes,
deposit in bank account.
Correct.
11.5 says deposit in the bank. So bank account is
Bank
can be
balance is
saving, can
included.
be current, can be fixed deposit, can be
Saving
Yeah.
account.
Must be bank.
Yes. Scheduled bank.
but you have to specifically reflect into the balance sheet.
Correct.
Now, जब तुम्हारा combined bank balance में if it is there, then you have to reflect this.
And in the return also now they are asking specifically.
Yeah.
See, this is for 11.2. This is for the 11.1.
Yeah.
They are asking specifically.
For that reason, even when you have 11.3A, 11.1A, by your sale of an asset, people are claiming fixed deposit as an investment and for an asset.
But that is allowed.
Hello, no, there are so
Because-
many.
There are
are-
judicial
This
pronouncements.
judicial
Even 3
pronouncement,
months-
even there are cases of 15 days also was allowed.
Yes.
Now there is a circular. CBDT has
6 months.
6 months. I have said. So minimum 6 months you should keep to follow that circular. I advise it should cross one financial
One
year,
financial
31st March.
You should cross 31st. That is the ideal.
So that
That is the ideal thing to do.
Sure.
Okay. Who's required to file ITR 7? Of course, then it is.
Achha, now we go to books of account first or ITR 7?
ITR 7.
Yeah, okay, continue.
Sir, this particular rule 12(1)G, I think there needs to be some because I have reproduced right from the Act, but it is not making a mention of Section 8 companies of Section 2013. Companies Act 2010.
Companies.
Section 25 companies they are
They are
mentioned,
not
but
replaced.
Section 8
No,
companies are
now 19, there are now 8 companies, but that amendment is not.
yeah.
Yeah.
See, in Companies Act, the new Company Act has come.
Yes.
So that those provisions of Section 25 are falling in Section 8.
Section 8
companies. So
also.
8 and 25 are
Synonyms.
the same.
Yeah.
Because 12A is also given on 25.
Yeah.
Yes.
Sure.
Talking about Section 139(4)(a), every person in receipt of income derived from property held under trust, again, trust organizations approved under Section 12(a). 139(4)(b) is for political parties. 139(4)(c), scientific research association, news agencies, and many sections under Section 1023(c). And Section 139(4)(d), every university, college, or other institution which is not required to furnish return of income or loss under any other provision of this section. More or less, scientific research organizations are covered under Section 139(4)(c).
Here 139(4)(a) says if your income is more than 2.5.
2.5.
So it is
Not chargeable.
not chargeable. So even if you are not filing before less than 2.5 lakhs, there is no requirement.
Now,
Receipts or income?
receipts,
See, income for the charitable trust is a
Is
gross
receipts.
receipts.
gross receipts.
224(2)(a).
Then structure of form ITR 7. Now various schedule 1, that is like,
I think,
I have highlighted the important portions which are applicable to us. So that-
one point I marked, I think that will cover what you have said. Schedule CYLA. There it said details of income after set off of current year's losses.
It is not
So
required.
it's no, even 11.3, your income is increased. If you are setting off current year's losses, means more spending, that information is to be given. So it is indicating that it is allowed.
Yeah, but then one will
Yeah.
say PI next year.
No, no. That's a consequences will be that different. But this is current year's excess spending will be allowed. Yes. In the current year, no carry forward.
Carry forward.
So wherever there are changes, I have mentioned all those changes. Additional information on Schedule J, sorry. Section A1 of Schedule J seeks bifurcation of corpus donation, as we have discussed just now. And very important bifurcation is about donation received by trust institutions for renovation or repairs of places notified under Section 80G2D, as we discussed earlier. Then other corpus donation received with a specific direction. Section A2 of Schedule J seeks details of loans and borrowings and details of unutilized loans and borrowings. So as I said, because of corpus and loans and borrowings, there are major changes in the form, rampant changes in the form because of these two particular amendments. Then Section B asks about donations treated as corpus donation by trust institution notified under Section 80G2B, income accumulated under Section 11(2) by filing Form 10, income accumulated on account of statutory deduction as per Section 11(1), that is the 15% statutory deduction we are talking about. Then unutilized loans and borrowings, corpus donation as per Section 11(1)D. Again, all those information is repeated out here. Then Section C deals with the Section C, because I can't read this. Yeah.
Should include the savings account or current account also.
Yes.
So all the bank accounts.
It has to be included.
Has to be.
Has to be included to justify the corpus. Section C of Schedule J seeks information as regards investment held at any time during the previous years in concerns in which person referred to in Section 13(3) have a substantial interest. Earlier, this information was not required. But now this information has to be taken care of. And section D of Schedule J seeks information as regards other investments as on the last day of the previous year. Now, other investments, there can be various other investments, corporate bonds, mutual funds. A lot of organizations are nowadays investing in mutual funds. All those information has to be covered. Section E of Schedule J talks about details with regards to donation in kind. Now, here there is a query out here in the last column. Name and address of the donor, value of contribution donation, value of contribution applied towards objectives, amount out of value of contribution, donation invested in mode specified under section 11.5, and balance to be treated as income under section 11.3. Now, this is posing a challenge, I believe. Now, the most important thing is that donations received in kind will have to be converted so that it can be invested in the mode specified in section 11. This is what this table says. Of course, there has to be some clarification on this because it will be a big challenge now to convert the donations received in kind.
So you have to apply for the towards objective.
Yes.
Put the entire amount over there.
No. How can we
So,
put
you know, I received say a flat. I want to use a flat for the purpose of the trust.
Okay.
So I received donation in kind and I say it is applied for the objects of the trust.
No, flat is okay. Now, for in other organizations where we receive a lot of donations in kind in piece, Sona, Chandi, Zewa. What in that case? What in that case? Yes, flat is okay. I understood. It is a one. एक चीज है, एक चीज apply कर दिया. That's it. But when we receive various donations in different formats, in different volumes, and why 11.3?
See,
30% taxation.
See,
The 30% taxation is fine.
Trust is carrying on the major repair on the trust. They may be receiving cement and other things, other building materials.
That is applied, sir. That is applied.
Where is question?
That is not a problem.
आप सीमेंट बेचोगे तब नहीं
नहीं,
I'm asking you. But you can sell it. Suppose you have received 1,000 bags and you have utilized only 500 and your project is over.
It happens.
Then what you will do for
If
those
you have a
500?
charitable trust and you receive say 1,000 bags of rice, आपका consumption 50 बैग का ही है. तो बाकी 950 बैग्स का क्या करोगे?
500 बैग का क्या करोगे?
फेंकोगे तो नहीं उसको, बेचोगे ना उसको.
Those situations are also, but here in schedule section E, the heading is voluntary contribution donation received in kind, but not converted into investments. So this is a column where the donations in kinds are not converted into the
More
11
specified in
mode.
section 11.
And the time prescribed for the conversion is in the next year after the end of the year in which it is received. Suppose if you have received in financial year 22-23, so by 31st March 24 you have to convert it.
That is for everything or shares only?
All kind.
All kind.
All kind.
For everything.
No, all kind means if it is 11.5 investment, FD is given to you, then where is the question?
There is no question.
Yeah.
Bank kind which is not covered in 11.5.
Yeah.
So there, if you have not converted, or in between year, the year in which you have received, you have not to file this. It is to be filed only when you have not converted. Then 11.3 will enter. Right.
Even for jewelry, some of these temples, when they get jewelry, they say it is applied. for the-
Applied.
It is applied.
It is applied.
Now shares, other things are received,
That is
which
the problem.
which you cannot apply. But dative, if you are receiving, even if you are buying, that is also, there are case laws, that is also treated as a application.
Yes. So all these,
But only in the case of, but there is a question that came up, which I'll just narrate it. If a trust is buying gold bars,
it happens in our trust. It buys silver bars, it buys gold bars for the
then-
purpose of converting into vessels and for the deity. It does happen.
then what?
We showed as application.
Application is when you convert it. When you invested that 11.5, you are violating.
Supposing I take a building, I buy bricks, I buy cement, and I don't construct at the end of the year, does it become a violation?
No. That construction is a immovable property. This is movable property. That's the difference. Second thing is buying a gold bars or silver bar are not covered in 11.5. Third thing is if you have received donations, so that you have to convert. So my opinion, even I have in the group also, I have differ this. According to me, the moment on which you are buying those, you are not buying 11. You are investing.
No, it's not an investment. I'll tell you. If it is an investment, I agree with. So it has to be fact-based. So majority of these Jain temples which are there, they get donation. Sometimes they do get gold and silver, but sometimes they get money for the purpose of buying the gold. They buy the gold and they give it to the smith to create a jewelry or
whatever
form, whatever it is. So where you are supposing I received on 30th March only, the gold bar I bought. So does it mean that 31st March it will become my 11th violation? No, I've applied for it. The question is, it's like anything, brick, cement, everything. So brick is a movable thing at any point of time, unless I put it on the list. Similarly, gold is a movable item. So unless you prove malified that I have then sold that gold next year and bought something else, I don't convert it into jewelry or I don't convert, there is a different question. But if I have genuinely utilized it for the purpose of application in the next year, I don't see why it should not be allowed as an application. But yeah.
Then investment in 11.5. Application is different.
Application. Investment in 11.5 violation, yes.
He means to say that we are applying.
My submission is whether can it be treated as an investment in non-11.5 permitted mode. So whether buying that for what purpose you are buying, it comes thereafter. So any officer can take this view.
Yes.
So it is challenging. It's a gray area. We'll have to see how the court, in case if it goes, disallowance goes up to court, then we'll just come.
So
I
here-
think we have a very short time
Right.
because books of accounts we have to cover in detail because that's very important. But here also very nice.
Received in kind. So what are received in kind, you have to mention.
That is there. That is there. But here this column E section says, but not converted into investment.
So in this year, it has
Conversion
not
is 1
converted.
year. The conversion you would require 1 year for conversion.
Conversion, yeah. So whatever you receive, you have to mention here. Right?
Yeah. No, not as a receipt. You just explain again. And supposing you bought the, you are not able to convert within 1 year. So it is, you have 1 year to convert.
That's what I'm saying.
You utilize
Yeah,
that period.
yeah.
to
And
not
as
show
you
the-
said that you are saying that it is applied. Finished.
No, what I'm saying is you are received in this year. In this year, you are not converted into 11.5. So you have to mention here, no?
We take it offline, otherwise.
No. I think here headings are
Different.
donor value is that, and the heading says not converted. Means you have received but not converted.
As on 31st March,
You have not converted.
you are not going
but-
to make a mention.
That's what I'm saying.
That means they need an information from you, which is.
Arey Baba, then other columns.
What?
5 and 6.
You get filled into 11.3. You get automatically. We'll take it offline. We'll miss out on a lot of things. We'll take it offline because there's one more session to do.
Now, detailed information in party balance sheet may again, there is a lot of breakup required. Detailed breakup is sought with regard to sources of funds. Again, precise details are asked about own funds, loans and borrowings, advances, and application may be are talking about fixed assets, investment kept in mode specified in section 11.5. Other than section 11.5, current assets, loans and advances. Again, application of funds. In the earlier form, such details were not required. Now, again, this is a repercussion of all the amendments which have been made by the Finance Act 2022 and the earlier acts.
कोई question है तो देखते रहना.
Here, see the balance sheet. They are asking only that limited headings are there. There are so many other heads. So you have to merge a club and that. Another thing, another
You have to
issue.
consolidate the thing.
Another issue which is propped up is if income expenditure is asset side, debit balance, then there is nothing, nowhere it is even not at liability side, not at asset side. So current assets you have to put and accordingly file.
Or you reduce from reserves.
No.
No.
Current assets.
No, but sir, over here we have to discuss that if the income and expenditure is on the debit side, Does it not mean that either the amount is utilized from loans and borrowings or the amount is utilized from the corpus?
Why 15% accumulation is also there?
Yes. Okay.
If it is old trust
Hmm.
and there is a minus means excess spending of earlier years,
Okay.
then there was no any such provisions.
Okay.
Even if it is utilized out of corpus also, how can you add in this year?
But
I am not claiming application in this year.
but can we not net off that amount from the corpus? Because ultimately we have to
See, the
compensate.
corpus is your capital.
Hmm.
This is your current assets. Means you actually liability, my current liability. It comes
Right.
under the liability, but that heading is not there.
I understand.
So we have to find out the via media. So you have to write there in the.
Because ultimately from the reserves we have to
We
adjust.
argue the corpus is received for particular purpose,
Hmm.
say for education, for medical relief purpose.
Yes, yes.
So now we have spent in earlier, therefore this purpose only. So
Nah.
why we should not release from corpus?
See, that can also be done. Corpus minus income expenditure is a specific. It's a part of the. There are certain trusts I have seen. If they transfer that income expenditure account to corpus,
Corpus.
general fund
Yes,
and
yes,
minus
yes,
corpus
yes,
में से
yes.
करके चला रहे हैं.
Yes.
Or add to that whatever
Add
the
to
net
the
figure.
corpus.
But if you are preparing balance sheet as per Maharashtra Public Trust Act, you have to show separately. If you have Section 8 companies, you have to separate accordingly. So my submission is here, you have to prepare another balance sheet for ITR set.
Yes.
Just for working, you have not to certify that, but you require that for income tax as well.
Adding the corpus, there was one trust which added the income expenditure to the corpus. We had a query from the
Department.
County Commissioner saying that you give details of corpus and give a
Certified.
certificate from the.
Standard.
When we change the balance sheet, I can't give a certificate where there is no corpus.
That is why it is not to be added to corpus. It's a impact of earlier excess
Yes,
spending
yes,
or
yes,
the
yes.
net figure. Only thing is while drafting, they have not visualized this situation and they have not told. They might change it in the
They might change it.
and we have other options. Show is
We have got other options. Practical solutions are there, sir.
So here the answer is that you show as current asset,
Yes.
right? No, for the participant, I'm just,
Current assets or current liability?
no, it will be
Those-
debit
those
by.
minus.
Minus.
Minus, you have to reduce that.
Company explained 50 case asset. It is a 50 case asset. 50 case. We need to move fast.
Okay. Additional information again, domestic contribution and foreign contribution. Again, that information is asked for again for further compilation. Nothing much to cover in this. In all the changes in the table, this ATG2B is figuring out everywhere.
Someone has started seeing that everything goes wrong.
Information as regards amount invested back or deposited back in the specified mode of corpus. This amount earlier it is allowed. Then whenever you are recompensating or compensating the corpus fund, at that time it will be allowed. So those details are asked for over here. Then coming to the subject, sir, books of accounts.
No, first of all, what are the other issues anybody has faced?
Yes, sir.
Dipesh.
Is there any
Questions?
query online?
देखो ना.
Yeah, do
Six.
questions there.
6 boom.
ये red वाला click करो. Just answer it.
Audio problem.
Please don't proceed.
With the amendment in provision of corpus, the trust is required to invest the corpus fund in modes under section 11.5.
Correct.
If the trust receives corpus fund and it is not able to deposit it in modes as specified under section 11.5, then for the purpose of computation, will the corpus which is not invested be treated as income, and will application of the same be allowed as a deduction as per normal provisions?
No, so if it is.
I
not represented,
think the question.
They have not invested in mode specified in
Okay.
section 11.
But corporate donation, whether you have received in cash or check.
That is
If it is,
Receive a share, probably.
No, shares
No,
not mentioned.
With the amendment,
Suppose it is coming.
No.
first
Let's
share
answer this
cash
question
and-
first.
with the
Let
amendment.
us not further argue or make in that question. The person has asked the question. Who is he?
Anita Vishwanathan.
So it is, if it is a check, generally corporate donations are received by check, it
Specific
is
direction.
deposited into bank. It is lying in the bank account. So money deposited in bank account, whether it is saving bank account, whether it is OD account, whether it is
Section
current account, it is 11.5 deposit.
It is-
So not to worry about that. Your money is 11.5 investment.
We have complied with section 11.
That's it. So many confusion is there whether bank balance is also
Yes,
considered.
yes.
11.5.
That is always there. Most
Only
of the people
care
have
is to
that
be
confusion.
taken that you do not reduce that balance from that amount.
And in comparison to that, suppose if you have
Ah.
a corpus of
Now
10 lakhs,
11.2 you say it is in bank, that is also 11.5. But your bank balance, the year or the moment it reduces, then there will be problem.
there will be a check.
Next question.
Sir, can you please again explain that trust who had applied for re-registration in March 2021 are getting provisional registration in the order, what they have to do? Now that has been stopped now. Nowadays, we are not getting provisional registration certificate.
No,
They
have
have
already
provisional
got
registration, they don't have to do anything.
They don't have to do anything because the circular has been issued and the circular states that the earlier certificates which were issued as provisional registration should be treated as regular registration.
Even otherwise, it is for 5 years.
It is for 5 years. The period has been mentioned.
In this case, we have to see Form 10 AC, whether it is under the right section.
Yes.
And the period of registration, if it is for 5 years,
Then it
then
is 5.
circular 11, you can see circular 11 of CBDT, which has clarified all this thing. It is to be read as a order of registration, and you are talking about March 21. So March 21 was the date before the original law came into effect.
The
that
time
is
period
1st
was
April.
from 1st April.
But there was in the rule, there was a provision that any applications pending on 31st March 21
should be
will
treated as
filed
application pending on 1/4/20.
12 AB.
You're supposed to file again.
No,
No.
we have got the orders.
No, in my case, they made me file again.
So that might have been from the, Bombay department to CPC, it might not have been gone or missed.
But generally, we
in
have got the orders.
my cases, whatever were pending, we got directly.
And one more clarification, supposing he's got a 3-year provisional registration, though he's an original existing trust. I think 11 covers even those trusts to be, or you want to go for an appeal.
See, you have two options. Because just now, one case has come up for ATG. They did the mistake in filing Form 10A.
Form number 10.
Instead of that code 11, they mentioned code 12. But 12A, it is code 1 was there, so they have received 12A for 5 years. But ATG was for 3 years. So they thought it is a provisional registration. It was by their mistake. So they applied 10AB, they filed and conversion into the regular registration. So there they are asking everything.
Yes, yes. The entire process will be.
Entire process will happen.
So such cases it happens, and there is no any provision. There is no any condonation of delay. If you have missed that date, your registration is gone. Your trust is unregistered. You have lost ATG. Even 1023C, you will
The only remedy is provisional registration.
Yes.
Any other issue, Ashok, you have faced while filing Form 7?
So there is a tribunal decision where they have given provision for 3 years. They have moved it, they have made it into 5 years,
No.
saying that.
Okay, no, I'm asking in filing Form 7.
Just a moment.
Apart,
That ITAT has given. Please share that in one of the. I mean, it's just a member of Surrogate Study Circle. They want. He has also the same problem. Then he can go for ITAT.
Yeah, they should go for it.
Ah.
So we had suggested.
No, but you did the mistake in filing the form.
In this case, there was no mistake. The provisional was on its own. They had made a mistake of giving a provisional for 3 years
Okay.
instead of the regular.
Instead of the regular
No,
registration.
then
of
it's a
5 years.
different case.
It's a different.
Any other question?
Yes.
In ITR 7, no.
yeah.
Can you
No,
please
so
explain?
one
explain
second,
other-
I got this from
Hi,
some
nice
member.
man.
We have Is there any?
There are
हाँ,
questions.
बोलो.
कोई पढ़ रहा है.
नहीं, मैं तो ये दूसरा.
Who had applied for registration, okay. How do we record spend of corpus funds in the books of accounts?
How can we?
How do we record spend of corpus funds in the books of accounts?
The book entries for spending of corpus.
How do we record?
Because you have excess spending.
How do we record spend of corpus funds in the books of accounts?
So you would, whatever you spend, you will show it against corpus fund. And then when you reimburse it in the following year, you take it as an application.
But how? The question is how you pass the entry.
How do we record spend?
You'll have to pass a journal entry instead of taking it to profit and loss, you take it against the corpus. And then when you reimburse that, you take that much credit.
Then debit balance, we can, that issue will not arise.
No, so my question from this is, supposing if you want, should I first disallow the claim in my return and then claim it in the following year, or do it sooner in my books of account?
In computation.
You should do it disallow in your computation.
Computation you disallow. Then when you again redeposit, you can pass the entries in books of accounts. Rather, it is advisable to pass the entries. Even I am suggesting for accumulation also, you should pass the entries in the books of accounts. So there is a record. There is a very clear cut. You remember, and you need not have so many problems. And you know when what is utilized, and it reflects every year. So that is a practical solution. But for here, you can pass into the corpus expenses, and then when you recoup, you can again bring it back to the. But 11.5 investment is to be replacement. Is to be done.
Is there any?
Yes, sir.
One more.
Books of account and tally received in check. Okay, that's done. Reference regarding
50,000.
books of accounts on tally, what will be the place of maintenance of books of accounts? Electronic. It can be done in electronic form also.
And registered office.
At registered office. At registered office in electronic form, physical form, in whatever manner it is convenient to them.
Yeah, it should be wherever the server is there.
Of course, the registered office.
I think we'll
That we
cover
will
in
cover.
books of accounts. I
That
think
we will
it is,
cover.
we are
That we will cover. Sir, what happens if the trust has already spent some for capital? The same question again, received in check. Then, sir, what happens if the trust has already spent some for capital asset? The corresponding capital asset can be shown as an investment.
even immovable property. Now, question is here whether investment in movable is considered 11.5. That issue is continued, and I think it's challenging because suppose if you received ambulance as a donation,
Yes, in kind.
how can you convert? Sell it and then
No, it's for application.
It is for application applied.
application, but not investment in 11.5. How you will continue for that? So immovable property is covered. Movable properties are not covered in 11.5 investments. Application fine, but you are getting something which is you are going to use that if you have.
Why take it as corpus?
There is no question of take it as a corpus.
Yeah, show as income and application.
And
That's it.
so it has income and application.
On the one
That is
side,
what
it is income, and
You
one
have
side
to
it is
show
application.
as an income and then application.
Application.
There's no need to.
There is no question
Even
of
that
corpus.
under joint secretary has also given the same answer.
Yeah.
A trust has negative balance of income and expenditure account, example 5 lakhs. Corpus, example 20 lakhs.
What please again?
A trust has negative balance of income and expenditure amount, example 5 lakhs. Corpus, example 20 lakhs. And the amount to be invested as per section 11.5 can be maximum corpus less negative balance of income and expenditure account as the trust has not taken any loan. 20 lakhs minus 5 lakhs. That is 15 lakhs. So in the balance sheet can be disclosed in other corpus the amount of corpus less negative balance of income and expenditure account instead of disclosing under the head current assets.
What he's trying to say is that if I have
Corpus
corpus of 20 lakhs.
20 lakhs and
I have
negative
spent
balance.
it, so that I don't have fixed deposits of 20 lakhs.
I have got fixed deposit worth
Only have to.
Minus balance of 5 lakhs. So he is considering 5 lakhs to 50
Yeah,
lakhs.
so he shifts corpus to the.
Again, that has to be compensated again. That has to be compensated. If it tantamounts to using the 5 lakhs from the corpus fund. And it has to be compensated. And when you compensate it, it will be treated as an application.
So same.
And now
question,
this 5 lakhs will not be
now-
treated as an application.
No. So we are suggesting not to take it to corpus, no?
Yes.
isn't it?
Like what we are saying is, sir, yeah, from 20 lakhs, 20 lakhs is the corpus fund.
Yeah.
You are spending an excess of 5 lakhs. That 5 lakhs you are using from the corpus fund, in
Yeah,
short.
yeah.
So that 5 lakhs we will not show as deficit. We will say that this 5 lakhs will be disallowed. It will be allowed only when the corpus is compensated.
That is okay. But how to, where to show that is
In fact,
what
in ITR, when we list down the expenses in the application, there it specifically has the source of the expense. We have to write that current year's contribution, last year's accumulation or corpus. So that has to be matched with the expenses which are there. So there automatically this will be captured against corpus.
It will be against the corpus.
No, so in his balance sheet also he'll have to show it, he'll have to adjust it against the corpus and then show.
Yes, he has to.
He has to.
Yes.
Because that is the only,
From the corpus.
because that is the only source available.
Yeah, any question
Yeah,
you have received?
no, yes. We have to fill up corpus and also investment. Any difference is assumed as income. Sometimes corpus may be there, but there is a negative balance in income expenditure account, but that is to be replenished by income. No, I think some problem is coming, I am saying. Okay, if the excess last year's deficit is there, that it is taking as income. I have not filed it. Somebody was telling me.
I have not experienced.
Okay.
Not explained.
Also, balance sheet does not allow that. Is okay. The tip is to match corpus with investment that we have discussed. If we show bank balance as not investment, then uninvested corpus is also taxed.
Bank balance is that we have already discussed. Bank balance can be
Usually there is a feature that uninvested corpus balance will be taxed.
taxed.
This year's, na?
Yeah.
But what about opening? होगा तो नहीं होना चाहिए ना?
No,
But
so
whether that
what,
is
that's
taken.
what he is saying,
Saying,
that if
yeah.
you show it in current assets and then you don't have investments of that much, I will be taxed on it. So the only option is to show it as a removal from the corpus and reduce it.
Friends, as regards these issues in filing a form number 7, yesterday also PCIT himself has admitted that there are various problems in filing. Yeah, PCIT exemption. Yeah, he said there are filing. I know that there are problems. We have received so many representations also, and we are working on that.
They're
So-
trying to solve the problem.
Solve the problem. And if any member has any issue, kindly mail it to the members. We'll take to the Gupta ji or Vipin bhai or Ashok Mehta, whoever concerned person, and we'll try to solve those
And we
questions.
can send to the PCIT as well, where
Yeah,
problem
yeah,
persists
yeah.
to that there is no solution. There are certain
Yeah.
problems which there is no answer. They have to correct their.
Correct. Yeah.
So anytime you can send to the chambers office, we'll take.
Consider that.
Consider that. With this, friends, we come to books of account, our next topic. Recently, some notification is issued. So Vipin will discuss on
नहीं, नहीं,
books of account.
इसको-
Yeah, वो करेंगे।
इससे start दो, मेरा
Yeah.
तो मैं final point बोलेगा। कितना है तेरा book of accounts?
इसमें नहीं है ना?
है
Yeah,
ना, है ना, है ना।
yeah.
इसमें एकदम ब्रीफ में लिखा है.
Can you describe the issue?
No. हाँ, books of accounts.
Yeah, you see.
Circular होगा.
हाँ,
Sorry.
16 पेज से है ना।
70. हाँ 16 पे. वो एक पेज मैंने इसमें ऐड किया. इसलिए मेरा 17 है, आपका 16.
ना ठीक है ना। हाँ, ये
Books of accounts and other documents, notification number 94, 10th August 2022, 24th amendment 2022. While the Finance Bill 2022 clause A to the 10th proviso in section 1023C of the Act and section 12A 1B1 was added, which read as follows: the books of accounts and other documents have been kept and maintained in such form and manner and at such place as may be prescribed. While the above notification, the CBDT has inserted Rule 17AA, which specifies books of accounts and other documents to be maintained. This rule is effective from the date of publication in the official gazette. While the aforesaid rule, all charitable trusts, institutions, universities, and other educational trusts, hospitals, and other medical institutions are required to keep and maintain books of accounts, all types of books of accounts, original bills of payments, PAN, Aadhaar card, and addresses of voluntary donors and trustees, along with details of loans taken and investments made by them, records of projects undertaken, voluntary contributions received, and practically many other information, lot of information, income from assets and investments, purchases made by the trust, donations received from overseas, application of income outside India containing details of the amount of application, name and address of the person to whom any credit or payment is made, and the object for which such application is made, record of properties, movable or immovable. In case of immovable property, details such as nature, address of the properties, cost of acquisition of the assets, registration, documents of asset, transfer of such properties, and the net consideration utilized in acquiring the new capital asset. In case of movable properties, details of nature and cost of acquisition of the asset. Now, besides this, there are many other documents and or information which are to be kept by the trust. Practically all the documents are to be maintained. And again, this is a very inclusive list. This is not an exhaustive list. This list can change time and again based on the operations of the trust and based on the activities done by the trust. Now, how this has to be maintained? All the above books and or documents are required to be maintained for a period of 10 years from the end of the relevant assessment year. That is effectively 11 years from the end of the previous year. The records may be kept in written form or in electronic form or in digital form or as printouts of data stored in electronic or digital or any other form of electromagnetic data storage device. So you can not only physical, you need not maintain physical records, you can maintain digital records. Then records are to be maintained at registered office as we had discussed just now. However, it may be kept at such other place as the management may decide by way of a resolution, but that place has to be intimated to the income jurisdictional AO within a period of 7 days. So this is the crux of the notification. Within 7 days.
को दूसरा काम तो है नहीं ना.
No, actually from which, what is the actually you want to do?
I'll come to
Yes,
my
detail part.
my certain.
Yes,
These are all simple. You can read and
yes, you can read and finish.
go ahead with that. Number one is
One question was there.
let me complete, then go to question.
Yes,
Sure. Because already we have crossed the time limit.
Yes.
This maintenance of books of account and documents are applicable only to those trusts having income more than 2.5 gross receipts in 2.5. So the small trusts having less than that limit, this
not maintain this
it's
book.
not applicable. They have to maintain to find out in case of assessment also they need to have those, but for their own systems and manner, it is not strictly as per this notification.
Yes.
That is one thing. Another thing is the effective date. If you see this notification is on 10th of August, and there point number 1 says it is effective from the day on which it is notified. So these provisions are applicable from 10th August as per notification. So suppose if it is from 10th of August, correct?
Yes.
So what about up to 9th August? How the things can be kept your own system? How from 10th of August it can be done with the new requirements? So that is one issue. Another is very important point. Section 12(1)(b), 12(a)(b) was amended by Finance Act 22, wherein the provisions of books of accounts are incorporated. Earlier it was audited, section.
So talking only about audit.
12(1)(b) is for the provision of audit, that is 10B form is to be filed.
12A1.
There it says the following clause B shall be substituted for the existing clause B of subsection 1 of section 12A with effect from 1/4/23. So the Act prescribes that these books of accounts are to be maintained from 1/4/23. Means assessment year 23-24, financial year 22-23. And this notification says
10th August.
10th August. Now notification is amended rules. So now question is, rule says it is applicable from 24th amendment rules, whether rule will prevail or act will prevail.
Act will prevail.
So the general opinion is the act will prevail, and act. I have checked even the website of the. There should not be the mistake what printing error. That also I have checked. It is 1423. So the maintenance of books of account is made as prescribed from 1423.
1423.
Of course, 23-24. Any provision in income tax applicable from 1423 means 23-24 financial year 22-23 means the current year.
Current year.
In current year also 10th August.
Correct.
10th August 22 also falls under the
In
current
the
year.
financial year 22-23.
So what about up to 9th of August, from 1st April 22 to 9th of August? Or you have to revise all your accounts and give those informations. So I think this transitioning period, there may be some, or they may take liberal view on that. And wherever possible, it is to be covered wherever possible, so that you practically you follow both the dates. That is one thing. Another thing, voluntary contributions. They are asking details of name and address.
Name and address.
So voluntary contribution record is to be maintained for name and address. Then it is written PAN or Aadhaar if available. So it is not mandatory to have PAN number or Aadhaar number so far as the
voluntary contribution,
which is not a corpus.
Corpus.
Not corpus. Corpus, they are asking for PAN. That's what the difference I wanted to bring.
Corpus, they will ask for PAN.
In the letter also can be given without PAN. What is that? But thing is this, the requirement in the corpus donation, they are asking PAN. And Aadhaar, there also is available. Then the application out of corpus.
If available is applicable to Aadhaar or PAN and Aadhaar. No, separately they have mentioned. Aadhaar is available.
Go to the
notification. No, both is available. PAN also is available. Aadhaar is also available.
So there also PAN is optional.
In the case of voluntary contribution.
Corpus also.
Corpus also.
Voluntary के लिए कौन सा है?
है ना?
I am not able to find it.
It is there for corpus or voluntary. Point number 2, page number 8. Record of income by a person during the previous year. Voluntary contribution containing details of name of the donor, address, permanent account. Then there are 3 points. Then thereafter, corpus is different. Then there are other points, records and all these things. So this is what another point I wanted to do. Corpus, we have to give the details. Now address 1023C or 12AB, those things are normal, which details are to be given. Accumulation. Now in accumulation, where 9A is there. So they are asking record for details for reasons for availing such details. This is something new requirement has come up. Now you have to mention in your books of accounts, or you have to maintain documents or record in such a manner that gives reasons for availing such deemed income. Though the provision says 2 reasons.
Not received or any other. Not received or any other.
Only 2.
So I think if it is not received, then you write the money is not received.
Yes.
Or any other reason. Now, any other reason you may write or you may not write. Because the Act requires only these 2 bifurcations. In any other reason, there is no requirement. What any other reason? So here, but they are asking accumulation. You have to write deemed income, why you are claiming, and what the reason for that. The same way, details of purpose for which such income is accumulated. 11.2. 11.2 is specific. We have to file the form 10. So that the same is to be mentioned. A maintenance of certain records where you have to see that previous years, means the current previous years, earlier previous years, details which you have spending or which you are using, those details are also required to be mentioned. Another important point which I found is details of property. Immovable and movable assets. The requirement in the notification is cost of acquisition of the properties held. So you have to mention what is the cost of acquisition of each and every property, whether it is movable or immovable. So where people are using for years on written down value method, they have to go back and find out what is the cost of acquisition.
WDV.
Whether who can have a retrospective effect, it should be a prospective effect.
You maintain now. You from where you find out, it is up to you.
No, but how they can prescribe so far? It was not.
That's what. Let us write to. These are the points for books of accounts. I am going to write to the chamber. Important. Which are the points they should say? Now onwards.
On now onwards.
But who cannot have a retrospective?
Real rule is that maintenance of books of accounts. The Act says as prescribed. So this is prescribed.
Should have prospective.
So it is covered under the Act. Dinesh bhai.
So if the original cost is not available, can we revalue on
No.
that particular day?
That see,
No, they are asking
it is
for-
an official gazette notification.
Talking
It
about
says
cost
cost
of
of acquisition. Now, cost of acquisition you find out if you don't have.
Which way?
Now, thing is this. Then you pass an entry for depreciation and depreciation fund. Now, suppose 10 lakhs property you have taken, and now the balance is only 8,000 rupees. So now you take 10 lakhs as a cost of acquisition, and what about 9 lakhs, 92,000 depreciation fund you create? So this is what you want. So I think this is a point. Another can be represented. Okay, why cost of acquisition has no आपका assessment में क्या फर्क होता है? Asset depreciation is not allowed if that income is taken as asset is an application of income. Next point.
Purpose for FCRA. We want to take over the FCRA accounts and the cancellation of.
FCRA is there also. It is requirement that any FCRA properties are to be mentioned and maintained accordingly. So there are FCRA provisions, FCRA separate books of accounts are to be maintained. So that's a different field at all.
But this is even more onerous than that. If you look at what the FCRA books of accounts, it's more onerous than the FCRA.
What organized? Even these requirements are not there for the business community.
Yeah.
You want trust to maintain. Okay, we can, but there is some relief joint secretary has given. I'll come to at the end. Then name and address and PAN and Aadhaar if available. That's a specified person. Now, in case of a specified person, PAN number is compulsory.
Must.
So if settlers are there 50 years ago or 30 years ago or 60 years ago, if your trust has been created, those settlers' name and address are required, that we can find out from the trust deed. But their PAN number finding out is a difficult task, not practically possible. So in so many cases, I found the settlers are not available at all. Even certain trustees are not available. So those practical problems will be there, but there they require PAN, Aadhaar if available. But PAN is required. Then documents of the effect.
Settler is expired.
Their relatives are covered. Why? Then 13.3 says their relatives.
Relatives are also
Grandchildren,
section
fourth generation are covered. If the donation is contribution, our settler is there then. So this list is very vast list. Another who is going to. Oh, yeah.
This is more important.
No.
No.
We are interested in hearing you. See, so and now another point in this record of specified persons. Another is documents to the effect that such transactions are directly or indirectly not covered. In the sense, suppose if you say any payment or transaction to the specified persons, but it is not covered in the sense that professional, doctor, chartered accountant, or such services, or rent is given as per the market price. So you should maintain the document to the effect that such transactions are directly or indirectly not for the benefit of such person. So negatively, you have to maintain those records.
So this is like a arm's length pricing. Yes, you have to maintain arm's length pricing. It is saying that
Whatever way you have decided that it is not covered.
Yeah.
Or this is the market rate, and we have taken out this market rate. This is the proof for that, and that's why it is not covered. Remuneration, there is something. Leave it to them. Records of contribution made above 50,000, and 50,000 also aggregate. The aggregate. If somebody has 10 years ago for 10,000 and 20,000, and now current year 30,000, so aggregate 50,000, that person is covered. Now this is the very difficult and not practical aspect to be maintained by every trust. They are asking in the ITR 7 all these names and addresses of these persons were covered. Now 50,000, I think this limit, Gautam Nayak has said 95.
Yeah, no, he said we have till 50 lakhs, so they will make it 10 lakhs.
No, 50,000 limit
No.
of persons covered is around
95.
is there since 1995.
92. When the
95.
provision was
And then 92.
Maybe.
92, the provision was brought in 30. That
Yes,
point
they-
of time, the same limit is done.
So 92 to 22. So still the same limit is continue. It should be increased to a reasonable 50 lakhs or 10 lakhs, whatever they difficult. But this is a point which I think it is not practically possible. Then there is a books of accounts and other documents to be kept at registered address. Practically, whether it is E format or whether it is tele data or whether. In case if it is to be kept some other place, then that is a decision by Board of Trustees, and they have to pass the resolution. And after passing that resolution within 7 days to the AO.
After passing,
Now-
but now it has come into effect. So now we have to.
Now the practical solution for this we discussed in our office, and I'll suggest. Okay, now you pass the resolution. Okay, this is we have kept our books of account to this address, and you have to give the full address, details of full address, and intimate within 7 days.
Now, how to intimate to the income tax?
AO,
I mean, directly by a mail.
मेल भेज दो, टपाल भेज दे दो, आपके पास रसीद मिलेगा, मेल तो आपको
Yeah,
मिला
yeah.
नहीं मिला,
Yes, yes.
चाहे तो physical letter you can send, but that is after resolution.
Yeah,
So that is clear your point
Yeah,
of view,
yeah.
when it is
After
not
resolution.
from 10th.
First of all, the
resolution we have to do that along with the resolution.
Resolution you should give.
yes, resolution
They
is
have
to give as a supporting.
There is no requirement. It is intimation to be given. Department wants to know where your books of accounts
You
are
write a
there.
covering letter and attach.
I think the requirement, my mind goes that whenever they are searching group companies.
Yes.
Then they search the trust as well as their control trust. They cover, and so that's why they need the books of accounts and document. Acha, wherever the reopening is done, 147 notice has been issued. That the provision says, okay, unless and until that reopening is finalized, you have to continue to maintain those books.
Those books of accounts. Yes.
Now- Yes, now the last point which I want to say, what happens or what is the consequences if you are not maintaining or if you are not maintaining proper books of accounts?
Yeah.
So this is a point which we should discuss. Number one is that day Under Secretary says that there is no need of maintaining separate cash book or bank book. If it is in tally separately, it is maintained, that suffice.
That's suffice.
Only thing, the required details are should be available
For
accordingly.
verification.
So whatever books of accounts now is being maintained, it should be with full, complete as required under this notification. Those details are there in the accounts. So that you can say, yes, it is maintained, but we are maintaining this way. There is no, we have to separate register. It is not mentioned. Now here question arises because for the claiming section 1023 and 11 exemption, there are conditions are to be followed. And there, one of the conditions are maintenance of in 1023C, 10th provision, and in 12A 1B, where there are requirements of maintenance of books of accounts. So if you are not maintaining that books of account or not proper books of accounts, then the effect you can lose section 11 or 1023C exemption.
Yes.
But at the same time, 1310 comes into your rescue. So even in such that 1B and 1023C are covered.
Yes, expenses will be allowed subject to conditions. Right.
So this is the impact of not preparing or
The
filing in books of account.
Questions?
Yeah.
Sir, the small trusts which have their income less than 2,50,000. Supposedly they have a fixed deposit and they earn the interest on it, and the bank deduct the TDS. So we should file the return to claim that refund.
But showing that income.
Yeah, showing that income, and we have to then file the ITR also to claim that refund. But can we file with the bank form 15G or something like that so they don't deduct the TDS? So then we will not have to file the income tax return.
Correct.
Because
So
that's
filing a form, what is it? Form
15G, they don't
15G. No. It is not permitted to charitable
yeah,
trust.
that's
You have to get
So,
some income tax.
Now you have to get note 197.
yeah.
Then TDS will not be deducted.
Okay.
And accordingly, every year you should obtain that.
Yeah.
And so in very small cases or small TDS, I will advise to go for filing a return and getting the refund. Because 197 is also headache.
Yes.
It is not that easy. So I think all the questions are covered.
40,000.
Now it is become 40.
Yeah, now it's 40, but if it's 2 lakh.
You
2
can
lakh,
divide
yeah,
into various
yeah,
banks.
and-
Apply your practical,
yeah.
you deposit your bank where 30,000 interest you receive in different banks. There will be no TDS. So we should not give this advice to you.
I would like to broadly run through the scheme for faceless penalties, as well as certain practical issues few issues that we have faced in 270A penalty and the compounding of penalty under 270AA.
I think you have to unmute yourself.
No, it's So the faceless penalty scheme is nothing profoundly different from the faceless assessment scheme. Section 274, 2A of the Income Tax Act empowered the government to come up with a faceless penalty scheme. The section was subsection 1A of 274 was introduced by Finance Act 2020, and in accordance with the provisions, the faceless penalty scheme was introduced sometime in January 2021. The scheme broadly is similar to the assessment scheme. They say we will set up a faceless penalty unit, like we have faceless assessment unit. Only we have the assessing officer, they call it as a penalty unit, and they have a review unit. Broadly, the penalty proceedings will be initiated by the NFAC or the assessing officer. Once penalty proceedings are initiated, the files would be transferred to the respective officers in the penalty unit which is to be constituted. How the transfer will happen is according to the scheme framed by the government now, that they have an automated process by which, depending upon certain criteria, the penalty proceedings will be assigned to particular officers. Those officers, after receipt of the intimation of initiation of penalty proceedings will conduct the penalty proceedings, and wherever required, take the assistance of the penalty unit for conducting further investigation. Like in the assessment wing, we have investigation wing. In penalty also, they have similar provisions where further investigation has to be done. Matter will be referred there. And that investigation wing will then pass on their report to the penalty unit. Penalty unit will have a draft order of imposition of penalty, which will be forwarded again to the national penalty unit, which will then forward it to the review unit. The review unit will review the file and then give its comments to the penalty unit. Then penalty unit will decide based upon its own discretion as to whether the comments of the review unit has to be considered or not. If it is to be considered, then they will amend the order, amend the recommendation they have earlier passed, and then pass a final order. This is what broadly the scheme says. I have 10 slides on this, but nothing great or profound that we can amend out of it. With our experience in the faceless assessment proceedings, these are largely in line with those proceedings only. So I don't want to go into greater detail of this. The slides are already circulated, unless there are any particular questions that you want us to take. So penalty unit, this one, as of now, as Sharmaji said, till September, because there is no penalty unit set up till now, all the matters are coming back to the assessing officer. When I spoke to one commissioner, what will happen to post September? So September khatam karke uske baad dekhenge. Okay. September khatam karke, they will extend it to another September, because keeping a separate unit for this is practically becoming difficult for them. It's what they say. Everything is contemplated to be a faceless penalty proceedings. The scheme also says that there is no requirement for granting a personal hearing unless the assessee asks for. And if the assessee asks for a personal hearing, it is obligatory or mandatory on him to grant a hearing. The scheme does not provide for recording. The exchange of information will only be through electronic medium as the assessment proceedings. Now I want to deliberate more upon the penalty under 270A and the immunity from imposition of penalty under 270AA. I'm not going to go into greater details of the section. You would have all gone through the section broadly. The issues that we have practically seen are arising in the case of imposition of penalty is what I wanted to deliberate or provoke thoughts related to this 270A penalty. For ages together, we have been acquainted with the imposition of penalty under section 271(1)(c), where penalty was to be imposed if there is concealment of income or where there is inaccurate particulars of income. In the garb of overdoing or undoing all the jurisprudence on the subject of what is meant by concealment of income or what is meant by inaccurate particulars of income, the legislation in its own wisdom has replaced the phrases with misreported income or underreported income. What does it mean? Courts will have to decide. It will take its own time apart from what is there in the legislation. Without dwelling into much about what are the facts that will be covered in misreporting of income or underreporting of income, these are the few points that I wanted to place before the group to understand their thoughts. First point is, how should the penalty proceedings be initiated? Ordinarily, we have come across the case where assessing officer in the course of assessment will record that I am satisfied there's a fit case for initiation of penalty proceedings. There is a prima facie case for non-disclosure of income or inaccurate particulars of income. And thereafter, separate penalty proceedings will start along with the appeal proceedings. Now, the doubt is, with section 270A being replaced or 271(1)(c) being replaced by 270A, is it a case that in each and every matter of assessment where there is addition to the total income returned by the assessee, penalty proceedings is automatically deemed to be initiated. Is the question that I want to pose. My answer to it, subject to deliberation, is Section 270A starts by saying that the assessing officer may initiate a penalty proceeding. When he may initiate, and then it also continues with the phrase he shall impose penalty of 50 to 200%. When the word may is used along with shall, the word may has to be read only as may and not as shall, and therefore there is a complete discretion with the assessing officer in the course of assessment proceeding itself to say that this is a fit case for non-initiation of penalty proceedings, and therefore decide not to initiate penalty proceedings also. I'm emphasizing on this point because of one of the live cases. The live case being the commissioner in exercise of powers under 263 in one of my matters has set aside the assessment order on the ground that the assessing officer has not initiated penalty proceedings. Therefore, has set aside the order directing the assessing officer to record his satisfaction that it is a fit case for imposition of penalty. The matter is before tribunal. This is what experience does as in law. The first matter on that board on that day, I think it was before Mr. Prashant Maharishi, was Aarti matters. As we all know, with her experience, she stood up and started reading the assessment order. And after 15 minutes, came to the show cause notice under 263. The members were fed up and said, "Madam, ये तो पहले बताना चाहिए था आपको. Issue इतना ही है that he has the principal commissioner wants to set aside the order for non-initiation of penalty proceedings. ये तो covered है. How can he say that?" Other side, Revenue Council stood up and said, "I concede. Matter closed." 7-8 matters down the line was my matter identical. Being new in the profession, I started with the 263 show cause notice. Member said, "Well, commissioner is perfectly correct. You read 270A. It says he shall impose a penalty. All the jurisprudence of paper book of 20 cases you have cited is under the context of 271(1)(c). Okay. Therefore, the commissioner is correct." My lord's first matter was identical of Aarti madams. Then he said, "This is what experience teaches you." They reserved the order, not passed the order yet. Okay. Either in madam's case or in my case. Okay. So, what I argued before the tribunal was 270A says assessing officer may initiate a proceedings for imposition of penalty. Therefore, there is a discretion. To say in each and every case of addition, proceedings of penalty should be initiated looks absurd. Legislature would not have contemplated that you initiate a penalty proceedings only for the purpose of being dropped. If the assessing officer finds in the course of assessment that there is a bona fide reason of a mistake having happened, but addition being made, would not mean that it's a fit case for imposition of penalty. This is the first point that I wanted to address. Yes, sir.
So if you look at 270, there is a formula given for 50%.
Yes, sir.
In that also there are cases where they say that 50% also is not levied.
Yes, sir.
Okay. So the may is with respect to, if you want to read it, I was the would be that the may is only with respect to the cases where they fall in the rare cases where they say that penalty is not leviable.
Yes.
Balance, he was supposed to do it, or he should have recorded his reasoning that it is not leviable in the order.
Yes.
If we keep silent, that means he's not applied his mind and there is need to review.
Possible, completely possible, equally possible. But we are saying that there is no fun. The legislature will not prescribe a procedure just to end up with passing a non-speaking order. That's the only difference that we have. This is what experience teaches you. So I felt very unfair that day. I told them all. This is harassing juniors.
So you, in one of the matters, the Provisional was arguing the matter just before me. Then I argued the matter before Pramod. So they both were put in the next day. Only the stood first on board. You come last on board. if there is chance you come, right then you are on. It's only the stood. It's only on the.
So, first point was whether initiation of penalty proceedings in the assessment order is mandatory. According to me, the answer is yes. If the assessing officer does not initiate penalty proceedings in the course of assessment, therefore, subsequently, he cannot initiate, nor can the supervisory officer ask him to initiate. Section also is clear. The penalty proceedings should be initiated in the course of assessment proceedings, be it 270A penalty or be it any other penalty also for that matter. That's the first point.
So even 271A,
Yes, sir.
if it is not initiated in the assessment order,
Proceedings?
it is violative of the.
Yes, sir. In my reading, he cannot subsequently initiate. That's the reason for which he does the assessment. The next point is whether if there is a bona fide mistake, like what happened in the case of PricewaterhouseCoopers, there is a mention in the tax audit report that provision for gratuity is to be disallowed, but by oversight in the computation, it is not disallowed. Will it make any difference that if this disallowance is offered to tax post assessing officer pointing it out? If there is a bona fide mistake in making a claim, or if there are matters which are subject to interpretation on both sides, if there are judgments of tribunal which on the date of filing the return was not overturned by the High Court, after the date of filing the return is overturned by the High Court or the Supreme Court, on the date of making the claim, my claim was supported by a jurisdictional tribunal or a High Court. In such a cases, can a levy of penalty under section 270A be upheld? Ordinarily, the assessing officer or the tribunal will say that the Supreme Court only clarified the position of law. Whether certain item is eligible for depreciation, say for example, computer software is eligible for depreciation as plant and machinery at 15% or as computers at 60%. Supreme Court, assuming 5 years down the line, clarifies it is only plant and machinery eligible for depreciation only at 15%. But today, as on the date on which we file a return, there are high courts saying that it is indeed computer software is nothing but computers eligible for 60% depreciation. Revenue argues in every matter that Supreme Court only clarified the position of law. Law will be deemed as if computer software was plant and machinery till the end from the day on which the section was introduced. Therefore, your claim of depreciation at 60% is nothing but misreporting of income. 270A provides a mechanism by which you have to compute the penalty. Therefore, I will levy penalty. According to me, claim of the revenue is incorrect because the section itself says, section itself, 270A itself says that in computing the underreported income, we will have to exclude those claims which are made out of bona fide understanding of the assessee. Therefore, the principles laid down in concealment of income or there is a furnishing of inaccurate particulars of income in relation to a bona fide claim will still hold good even in the regime of section 270A. This is another point.
But you will have to litigate.
So litigation to
वही तो करना है.
Sir, this is another interesting or practical issue that I am facing. Earlier under the 271(1)(c) regime, the penalty is 100% or 300% of tax sought to be evaded. Tax sought to be evaded is equal to the tax determined in the return, in the assessment order. there have been cases where salaried income, for example, tax fully deducted by the employer, but the employer did not file the return. Even if assessment is made, in that case, we say penalty cannot be imposed because tax is fully paid. But in the new 270A regime, the levy of penalty is not related to the tax sought to be evaded. It is under-reporting of income. So if an employee for whom 50 lakhs of salary, tax fully deducted by the employer, under-reported income is defined to mean the income that is not offered to tax. If you had not filed a return, section deems the income determined in the assessment minus 0 will be the under misreported income. Therefore, pay 50% of tax on that misreported income. Earlier, we used to say non-filing of return, maximum penalty when all tax is paid is 5,000 rupees. So even if you are not filed a return, no problem. Now, this scenario causes a big hardship. If in the case of an assessee who has suffered a loss, but does not want to carry forward the loss, or if he is a salaried employee on whom tax is fully deducted, okay. If he does not file a return, then a plain reading of the section says amount of penalty equal to tax, at least 50% of the tax payable on the income that has not been returned in the income tax return. Very grave, but practically possible the way in which the section is worded.
Can he file it in 148 and not get?
Sir, that was a loophole available when the section was introduced. But the next year they amended it, saying that if you file a return pursuant to 140, then also you will have a problem. So we are time and again advising many people, salaried employees, return file kare chhod do kuch nahi hai hoga. Tax is deducted and deposited by the employer. It's a practical difficulty. In case of some employee who did not file a return because they went abroad. They went abroad. Now when they received assessment order, fully tax deducted. Assessing officer says, I have to go. He says, assessing officer also does not want to levy penalty. He says, sir, tell me a way out. How can I pass an order not levying penalty, but still not attracting audit?
Bona fide belief, all tax is deducted, so now I need not file return.
The bona fide belief is only in relation to income not being taxable. It is not on return not being required to be filed.
Satisfied explanation, bona fide and SSC has disclosed all material back to substantive explanation of
That is claim made in the return. Bona fide belief is in relation to claim made in the return, not in relation to return not filed. Bona fide belief of return not being filed is sufficient defense for 271F penalty. Not here.
There then can be penalty levied in case one of the cases where Form 16 is only was not issued. 31st July has happened. Again, SSC has filed the return showing nil salary because there is nothing in 26 years. So then what is the scenario?
But salary is paid.
Salary is paid but not disclosed in 26 years.
That means it becomes an under-reporting
It
again.
is under-reported. So what needs to be done? I mean, if a return is filed, now
To the extent possible, revise it.
subsequently they will show in 26 years. Then we have to revise.
Yeah,
At that time, now itself we have to revise.
Immediately revise it.
Immediately revise.
because nowadays the processing is fast.
That whether employee or their representative, when salary is paid, how you can show nil salary?
No, I mean, it is not in 26 years.
That doesn't mean that your income
Not
is
received
gone. You should added the salary income and according to you, you have to file the return.
But then who will pay the tax?
Who tax? TDS, 26 years means there is a TDS.
It is not shown.
Not shown.
Not shown.
You claim it.
Claim it.
The 201 entitled to the TDS even if it is
But there is no information. No Form 16 was also issued.
You know your salary is 10,000, deduction is 1,000, the 12,000 is TDS.
But many cases happen like this. For example, SpiceJet. Jet
Yes,
Airways.
yes,
Jet
yes,
Airways.
Jet Airways.
Jet Airways did not deposit.
Access was SpiceJet only.
cafe coffee day. Okay. Chartered accountants.
Get airways.
So
Problem.
side also.
There was a greater problem.
Cafe coffee day. Chartered accountants. Chartered accountants in the finance team, they did not get credit for TDS. They worked for 3 months without salary also. Okay. So their practical difficulties are there in certain issues. Such situation, file a return, revise it immediately, sir.
Sir,
Yes.
what will happen if that year we have it has been escaped from our side or something? Can we take it in the current year and show it?
Salary taxable in the year in which it accrues.
Not salary, but other income like an interest or something. Supposedly in the previous year, the NRI was having a fixed deposit or something with the bank. The interest not came in the account, and the bank has deducted a TDS, but not his PAN was not available or something like that, and they haven't given the credit.
The interest is easy because taxable as per the books of account manner in which you maintain the books of accounts. You can say interest is taxable on receipt basis only, except if you are a company.
Yeah, because in the individual case, there
It depends on method of accounting. If you are following cash.
And you can say,
show in the current year, and so we will have a claim that we have shown it in the current.
yes.
The system of
No, but
accounting
then if the bank is not having PAN number, they would have deducted 20%.
Yeah, because the client.
NRI, so
Yeah,
only
yeah.
5, and then more. They do 0.8 something.
Yeah, but now as the PAN has been given to them, they had given the credit. So we can now do. It's better to do it to avoid that penalty.
Of course, yes. In every case,
Show the income for that particular year. So income tax assessment or income tax entirely works on assessment of previous year. If you show that income in some other year, that does not mean it cannot be taxed in that year itself. So you cannot show it in some other year.
Even the revised return, date is also gone.
No, you go for continuation, one line to it.
Yes, that is the best way.
You go for continuation. That's no problem. Go for continuation.
Yeah, please.
okay. That's all on 270A, sir. These are the 3-4 points which I thought I wanted to highlight on practical issue that we are facing. The gravest is the last one.
Because what you have to say is subsection 6, various.
Misreporting,
Yeah.
underreporting. only.
Yeah. No, what is bona fide,
Bona.
etc.
Yes.
Those various clauses have been given. If you fall under that, you may escape them.
But
That is, if you claimed in the income return,
Of course,
so you are not filed at all, then
then there is no recourse at all.
recourse at all.
So can we say that this penalty section has made it compulsory, more compulsory to file the return?
Yes, sir.
Yes.
Yes, sir. You can escape if you have a loss.
Concealment 271 1C was so much litigated, so they have totally replaced the.
This has got its own set of litigation.
Create new litigation.
They are creating new litigation.
Because the manner in which the provisions are drafted, it will create more problems.
There are lots
And
of
what is the quantum? Penalty quantum.
there are lots of people who earn interest income from India, and they say we don't want the credit. We don't want the credit because anyway, it is if I file the tax return in India, I have to take foreign tax credit in the jurisdiction. Overall tax liability is going to be the same. Therefore, without filing the return in India, I will show it only in the foreign jurisdiction and claim. Or if they are residents of Dubai, they say there is no benefit for me in filing the return in India. Tax is fully deductible. I'm not going to get foreign tax credit also. So there are now the assessing officer finds it out. No tax, but penalty.
In 1450, they started prosecution against.
Yes, prosecution.
And we had to go for compounded.
Yes.
In this case, we moved an application to the commissioner. 60 lakh salary, employed with Facebook. Bona fide mistake. He said, if you sit for 2 more minutes in the room, I will initiate prosecution.
Who was that commissioner?
The biggest problem for me was assessing was a chartered accountant.
And then the commissioner was right.
He was a chartered accountant. Okay. He simply says, sir, I always thought tax is deducted.
Get it.
I went abroad. I have no problem. We also don't know unless till the time the notice came.
60 lakhs salary.
There are a lot of them people. But I think 207 AA, there is some remedy. Just I have got a compound. You just compounding.
A compounding.
Another. Just
No.
yeah.
Okay. $270 AA. Generally, we see the provisions relating to compounding being powers of that given to higher officers. This is a section which by statute gives the power to compound penalty proceedings. Largely, the section says if any addition is made in the assessment proceedings and within 1 month you pay off the taxes and the interest, don't file the appeal, then penalty will not be imposed. We generally see this in indirect taxes. If a show cause notice is issued, without challenging the show cause notice, you pay the taxes, then penalty will not be imposed in your cases. Now that provision has broadly been borrowed in income tax provisions also. But there are certain conditions attached to it. First is you should not file an appeal. Second is that the penalty proceedings should not have been initiated for underreporting of income. You can compound under 270 AA only the proceedings that have been initiated for misreporting of income. If the assessing officer initiates the proceedings for underreporting of income, then the protection of 270, vice versa. Okay, my other way around. So if the proceedings have been initiated for underreporting of income, it can be compound. If it is initiated for misreporting of income, then statute bars the compounding. Plus, the application has to be made electronically within 1 month. There is no provision empowering the assessing officer to condone the delay in it. This is a completely new section. Assessing officers are also not aware about it. Of course, they say, sir, compounding hum to nahi kar sakte. So, this is a statutory compounding mechanism empowered with the assessing officer itself, can be explored in many cases. But again, the practical difficulty that we see is when, like in concealment and misreporting of income, assessing officer's name, there is concealment of income in view of misreporting of income, in view of misrepresentation. Here they say there is misreporting of income in lieu of underreporting of income. So how has the assessing officer initiated this is unclear. Once an application is made, he says, I have initiated for misreporting, therefore your application is rejected. And interestingly, the section specifically says an order rejecting your application in the section is not appealable. The order passed imposing penalty is appealable, but the order passed rejecting your application for compounding is not appealable. Bombay High Court in one of the cases says it is, yes, it is not appealable, but 264 provision can be invoked for that. That's the only solace that we have. This is
Under which one we can take actual, because they say we have no power, so they will not give you any opportunity for rejecting it. Then we can challenge the principle of natural justice.
sir, but the relief that we want is not achieved. We can say violation of natural justice. We have to come back to the same officer. They hear us, they grant us opportunity, but they are slightly afraid to exercise their powers in this section.
Now I will take an example. Salary person, he has not filed income tax return. He is receiving 148 notice.
Yes, sir.
Now he is declaring return, filing return with 50,000. He is declaring a gift from relative. And I2 is making addition.
Yes,
He said I have received from my close relative. Then he is making that I am filing this compounding. And I am paying taxes. So whether I will be immune?
If the penalty proceedings are initiated, that will depend upon how the assessing officer initiates the penalty proceedings.
So now there are two types. Once I have not filed.
Yes.
Another, so there are two types of.
Correct. Not filed and wrongly.
Wrongly. Now suppose he's not striking now, he's giving both penalty.
Practically what happens?
Huh?
Practically they don't strike out.
Then I can challenge, he's not determined with proof.
Even as lawyers, we say do not challenge anything. It is most difficult situation in Bombay today. You challenge anything, either you come back to the same officer or your writ is admitted and kept pending for 50 years. So to the extent possible to resolve.
Especially that principle, you have to give specific.
Yes.
Charge that will apply in this case also.
Fully apply, but the problem is there is no appeal against the order. Where an order is passed rejecting your application.
Appeal revived, sir.
Sorry.
Once he's rejecting, the appeal will revive, then I can file appeal.
You argue it in appeal that penalty is. The appeal against penalty order is possible. Appeal against assessment order is also possible.
Compounding is not.
Compounding is not appealable.
Yeah.
And as they are used to, they don't strike out.
Yeah.
This is the Bombay High Court, which says that it can be subject to 264, sir.
They have not exercising any power. Generally, 264, I have not power to waive the penalty.
Yes, sir.
I think generally all commissioners giving instant reply.
Glory-
39(9).
Glorified assessing officers.
I think they have given, why they have got power, they can release.
No problem. Yeah.
No.
You
No, that's all. I'm almost broadly covered whatever I wanted to.
Even
The misreporting and underreporting is another practical issue that we are facing. Assessing officer initiates penalty proceeding, misreporting as well as underreporting. In the course of penalty proceedings, you can argue with him and say that you can levy only 50% penalty because you are underreporting, not misreporting. But the consequence of he initiating proceedings for misreporting will bar me technically from applying for compounding this section. How to resolve that? We don't have answers yet. We might have to go to court, and we have moved an application also. It's still pending. Told him that your initiation of proceedings for misreporting is incorrect. Therefore, all our application still pending. He is bound to reject, for which we have to go to court and get a direction. Till that time, we have to be careful about the initiation also, sir. That these are the points that I wanted to broadly discuss.
With regard to this, your issue about the 278, where you say that the initiation is not there in the order, and therefore the 262 itself is
Yes, sir.
incorrect. There will be other precedents where they say may and shall is to be read as may.
Ah, yes, we have put that across. Okay, but knowing Mr. Prashant Maharishi,
There are judgments which say when you use may and then you use shall, it should be read as may.
the shall should be read as may. Leave alone may being read as shall.
The shall should be read as may. Those jurisprudence is there, but questions are covered.
Yes, sir.
Yeah,
No,
these are all
no questions. So that's why I said experience of Aarti madam did not go into the matter at all. Got it. Okay.